This session was maybe planned a week back approximately. Little was the thought, and the thought was what new can one dwell upon. And to my relief, I would say we have got a new circular couple of days back. Now, what are we seeing at? What are we seeing? How we will structure this entire session is something like this. In brief, for say 5 to 6 minutes, I will explain the broad construct of Section 194R, and thereafter, my recommendation, subject to how the organizers and each one of you would feel, is to focus on the new circular which is there. This provision has been active since the budget. So the Finance Act 2022 introduced this provision. From there, each one of us in various capacities have been involved in terms of analysis of this provision. And therefore, the thought was that let us bring on table certain thought process which comes after Circular 2, which is there. And that would be a good study of the topic concerned. Now, friends, as it was said, right, that there should be an all-round development. A person should look for a holistic development. And this is what the law also wants us. We started with TCS provision. So a person who used to be into a finance part of it, more likely into an accounting, return filing, etc., from nowhere is brought into the sales function, and he is asked to tell me how the TCS provision would be complied with. Matter of 6 months, we learned certain new facets, certain new business principles, which we were not aware because largely tax audits, etc., we don't get exposure to the business side of it, right? Wonderful experience. 6 months down the lane, then came the next level of transition. We were asked to pack our bags and move towards the purchase department in terms of 194Q. 1 year time period was given to us. A lot of learning happened in terms of how the procurement works, how a procurement is integrately related into a large organization. For those people present here who went into a SAP implementation, a lot of learning on the SAP point on modules, on nodes, which one were not aware as part of the FICO module. Perhaps 1 year was good enough. We are then asked that pack your bag again and move towards the marketing side of it. Because to each one of us, the goal should always be on the business side as a CEO and not restrictive to the tax function concern. And therefore, we all divulged into the wonderful study of 194R. The marketing spend was completely opened up, more than perhaps what an AMP dispute or a litigation required us to do. And then we questioned each one of them, applied the prism of law in terms of 194R. Each one of you will agree that 194R on a standalone basis was pursued to be of a very limited scope. What was the thought process here? The thought process here was that look into the provisions, that is there any benefit or perquisite provided by one person to another in the course of business or profession. As part of memorandum, we were also told that look at the language of it, and this is nothing but a corollary to 28.4. We were also told that there is some income which is somehow slipping tax, so hence 194R is required. Once this was acclimatized, we moved further and therefore made a proposition that we have got a Supreme Court decision in M&M. Cash benefits are not included. What is the meaning of benefits and perquisite? What are the situations in which the court in context of 28.4 had held that a benefit? After we proceeded further and made the analysis that this is somehow where the broad picture looks like. All of us were expecting guidelines. Looking into the experience from TCS and TDS provision, fingers was crossed that don't come up with something which nobody envisaged, and exactly the calamity struck. Circular given interpretation, perhaps which was not envisaged, something which itself will bring circular under a serious challenge. The circular under 194R, the first one which was issued, or the circular 2, because circular 2 I will refer to the recent one, and circular 1 is what we all are aware. Now that circular was issued under the provisions of 194R. Now this is a unique provision, and this tendency is there since last 2 to 3 years. That circulars erstwhile were issued under 119. It was for the purpose of implementation, and law was very well settled that this is not binding on the assessee if it has certain adversarial consequences. As far as revenue is concerned, whether you like it or not, it will have a binding impact. Here, a particular provision is introduced to make clear that statutorily this is binding on you, being a taxpayer, whether you like it or not. But that's where the powers of subordinate legislatures have to be studied in detail, and therefore it is not as if CBDT has a free hand to write whatever they so believe is the correct interpretation of law. It has to fall within the powers of law. It cannot write a thing which is not prescribed by law. If there is a Supreme Court decision which has expanded, which has given certain exposition to the law, then it is this Supreme Court decision which in effect also becomes part of law. So therefore, to me, Circular 1 moves far beyond the original purpose or far beyond what should have been in terms of removal of difficulty. Significant representations was made because this provision somehow touches upon perhaps a very large area of business. It has a vice of impacting my top line of the business, and therefore the moves was taken very, very consciously. Lot of representations was made, lot of noises was made on various issues, especially samples. Pharma companies was at one side of the pendulum. There were other companies which were into FMCGs, etc., where sample is something which one does on a day-to-day basis, and therefore the request was issue further clarifications. From there, that was the circular which was issued somewhere in the late June, July, till now in September, again on the second quarter, okay, where the law itself is there for 2 to 3 months. But now there is one more circular which is coming up, which says that these are the further clarifications which are provided. Now, with this brief background, I will directly move on to the circular, and then we will discuss the various points. Now, we all are aware this was the brief description. Now, let us go on to the circular question by question. Let us look what is stated by circular. Thereafter, let us look what are the consequences if these things which are stated by circular continues. And then, most importantly, what are the impact areas for other parties which are still waiting for clarifications. Now, the first thing deals with the loan waiver. First, principles. Let us look into the principles first. Why? Because this circular would say certain things. The circulars of late, and there is a tendency which is to me a damaging tendency. In erstwhile, 3 to 4 years before, the circulars were written in a manner where a proposition was described, a principle was laid down, and then it was left for the taxpayer and assessee to pick up that principle and implement the law. Now we have got a case where certain FAQs in terms of examples are given. Whenever there is a relief which is given, immediate next statement would say it is for the limited purpose and cannot be applied towards the larger case. So this tendency will likely to create a problem for many people. So therefore, for each of the FAQs which we will deal with, let us deal with the first principles. Now, under law, whether under 194R, the way in which we should read, whether this transaction itself is covered, because it is highly possible that even though I am applying a circular, certain facets are left out, and it is at that time where I will again have to challenge the law concern. 194R reads, any person, is the voice audible, Mehul? If you can just come in here.
Yeah, it's audible.
Yeah, it's absolutely correct. Okay. And in case if it is not just prompt, because internet can have its own shades of dialect.
Sure.
194R reads, any person responsible for providing to a resident any benefit or perquisite to the recipient carrying in the course of business or profession. Now here the law says that look at 194R. It is the person who is responsible for providing to the resident. Now 28.4, there is a specific circular at the time of introduction where a certain example was given. Now that was a case where law was trying to tell that there is an understanding between two persons that I am providing benefit to Sachin. I am going to gift an iPhone to Sachin because he did a splendid advice to me. Now there is a specific arrangement between two of us. Now in cases of loan waiver, there is no arrangement. It is a forced decision which one has to take. So it is not a question where I am providing any benefit. In fact, it is a consequence of a certain withdrawal measures which I had taken. Without prejudice, M&M decision should apply. There is no doubt because it was on a direct fact pattern. If it can't be taxable in the hands of recipient under the same wordings, there cannot be a deductor responsibility because the provisions are identical. Even if one assumes for the sake of the proceeding that 194 is applicable, then what? The question is then what? If I don't deduct TDS, there are 2-3 consequences which comes up. The first consequence is that you may have a disallowance under section 40. Now here, unless you are a bank or a financial institution, it is highly possible that a loan which is given may not merit deduction. One, even in context of banks also, there are certain other provisions where based on certain provisions, that means I create certain provisions for impairment or for loan provisioning, I get a deduction based on provision. I don't even need to wait for this kind of a right of concern. So there is a 40A1 at one side. Moving further, there is 201 and 2011A. Both travels in the same length. Now 201 applies in principle only when there is a liability, right? If there is no liability, how can a 201 mechanism come up? How can I get, because 201 provisos and provision specifically says that interest burden stops if recipient have paid the tax liability. But if the amount was not taxable at all, then how will you make the machinery workable? Itself indicates that this kind of transactions are not taxable at all. Having said that, look at what a circular says. If loan settlement stroke waiver by the bank is treated as benefit or perquisite, it would lead to hardship, as bank would need to incur additional cost of tax deduction in addition to the haircuts which he has taken. Will 194R apply? Now there is a specific things which are highlighted in red. We will come back as we move forward. It is true that waiver or settlement of loan by the bank may be an income to the person who has taken the loan. From where is this statement coming up, one does not know, because circular 7 itself make it clear, the para 7 of the circular itself make it clear, and I am reading it. It is clarified that this circular is only for removal of difficulties in implementation of 194R of the Act. It does not impact the taxability of income in the hands of recipient, which shall be governed by the relevant provisions of the Act. Now, if this is stated in 7, then why do you need first paragraph per se to say that it is true that waiver or settlement result in income? This itself means that one is not factoring the decision of Supreme Court the way in which it is, which should have been. You see, when this kind of wordings are used, and we do have the Chambers tax itself, our CTC decision by Delhi High Court in context of ICDS, all these things was brought out. And at that time, this wordings of such nature may give certain fuel to certain ammunitions or certain machineries. But ultimately, when it reaches to the stage, these are likely to be contrary and will result in creating further impairments or negative to a circular, which is in any case likely to be challenged at some stages. Next statement is very important. It is true that subjecting such a transaction to tax deduction under 194R would put extra cost on such bank, as this would require payment of tax by the deductor in addition to him taking a haircut. Hence, to remove this difficulty, it is clarified that one-time settlement of loan with borrower or waiver of loan granted on reaching of settlement with the borrower would not be subject to 194R. Any clarification which gives reliefs or which reduces the litigation is always welcome to begin with. Now, our role is at this moment and in the entire tenor of presentation is to find out what are the dots which are there or what are the cases which will come up for consideration. No means the presentation should be taken as an adversarial criticism, because if anybody, in fact, I will say for myself, if one is asked to write a circular, it is way difficult. It is way difficult then to criticize a circular. So therefore, this entire presentation should be taken in the spirit of understanding, with the hope that some of the issues will come up and would be clarified at a subsequent stage. Now, this is what the law says. Now, following are important facets of this particular question. What it is said safeguarding? It is safeguarding one-time loan settlement with the borrower, waiver of loan granted on reaching of settlements with the borrower, and lender should be one who is listed in the circular. There are certain list of parties which are largely financial institutions which are mentioned, to whom the circular says this relief should be applicable. To me, the far bigger statement is recognition of this fact that it is true that subjecting such a transaction would require additional payment, so it would put an extra cost. Great. However, it would have been great, it would have been far better if the circular would have stated that this waiver does not result in any kind of benefit or perquisite. Then that entire thing would have helped in many cases, but it does not say. It does not say so. It says I am giving you an exception, I am giving you an exclusion concern. Now when such things happen, a lot of doubts comes up. What is stated is waiver or settlement of loan. There is no reference to interest at all. Now, what are we telling? There is a borrower, there is a lender. It is highly possible that he is not able to honor very many commitments. Interest per se is not there. So therefore, the question, even to those people who are cherishing the benefit of this exemption, and rightly so, there are still certain gaps which will require consideration. So it's not that the end has been achieved. There are still certain questions, certain ironing which would be required to remove the creasing. Circular makes reference to loan and does not make reference to interest. Perhaps by interpretation, one can always say that unpaid interest also amounts to a debt and nonetheless it is a loan. However, if it is pursuant to a settlement, one will have to be careful the way in which one is then wording the entire settlement agreements. One will have to factor many things, section 43B, so on and so forth. Now, look at the way in which the circular is again worded. The question says if, and these are the important words, if loan settlement or waiver by the bank is treated as benefit, it would lead to so on and so forth. There is no qualification at all. It can be a waiver, it can be a settlement, it can be at any stage. But look at the last sentence after the red highlight. To remove the difficulty, it is clarified that one-time settlement with the borrowers or waiver of loan on reaching of settlement with the borrower would be so on and so forth. Now, therefore, a question will surely arise, and I would believe that the department would also not cherry pick the words the way in which I am picking, that if there is a 100% write-off which I am making, there is no settlement at all. I've lost it. A settlement would mean that two people reaches a conclusion and says that this is what it is, whether there is a benefit or perquisite which would be provided. From an accounting standpoint, there is always a principle to check whether the assets are representing its own value. If it is not, then one has to impair those assets. That is a reflection of your books from a true and fair point of view. Now, there may be a certain accounting write-off, though I am retaining my right to receive certain benefit, will also raise a question that is it something which will come under 194R? To me, it cannot come because the right is in fact. The benefit or perquisite should be a real benefit or perquisite. It should not be an accounting benefit or perquisite concern. What about restructuring of loan? Now here they are saying there is a haircut. That means 100 was given, 50 you are getting, 50 rupees you gave up. What about certain ways where I'm restructuring the loan, and this is eminently possible, where I'm extending the repayment period. I'm converting the loan into equity at a particular rate. I'm modifying the terms of rate. I'm giving you interest moratorium. I'm reducing the interest, so on and so forth. How will those things be factored? Will that be treated as benefit or perquisite? Now, friends, all the answers, all the questions answered should be no in principle if we read 194R on a standalone basis. But it is this circulars which creates more doubt, and hence one have already entered into the gallows of circular. One will have to come out of the circular and then challenge the law, because the reliance from the other side, that means the revenue, would be on the circular saying that this is what it is, and therefore one will need to see where the circular and interpretation of act takes us. What about assignment of loan? Now this deals with waiver, this deals with borrower. Okay, so if two things happens between a borrower and some kind of the person who has borrowed the money and the person who has lent the money, you fall within the four corners. What if I assign this at a less than fair value? It can be various reasons. But I just want to assign it at less than fair value. Whether you will say that, look, this has resulted in the benefit to the recipient, because somehow the benefit and perquisite is being read in a very rudimentary manner, in a very loose manner, in a manner which is not in context or in concurrence with the provisions of section 4. A benefit or perquisite which elevates to the level of income, because it's not just about TDS, it will get reflected in your 26 years. So therefore, to say that really divorce of the concept of income is something which is very, very doubtful. Now, even if such is the case, then the question would be, what about assignments of loan? Circular deals with borrower and does not deal with any other party, and therefore there would be some kind of questions. Now, here is the case where I'm buying back debentures at discount, FCCBs which I buy back. I believe that my redemption price is X. It is trading at a particular value. I want to just buy back and close the chapter. Whether it gives rise to a benefit, if it is, then whose benefit, who will deduct TDS, The questions will come up. The questions will come up and then ultimately be settled by the judiciary. But that's what will happen when a circular addresses a particular thing rather than laying down certain principles. If the principles were laid down, then Act could have been implemented in a better way concerned. What about a natural facet? Now, I am a borrower. It is highly possible that my promoters or group companies would have given certain guarantees. I am reaching a one-time settlement and bank releases those guarantees also as part of the settlement. Fairly natural transaction. In that case, what are bank required to do? Are they back to square one when it comes to guarantee? And again raise the question whether I need to deduct TDS. If I need to deduct TDS, then again whether it would be right to read the circular restricting it to bank or expanding this particular proposition. To me, a circular gives rise to certain illustration. One will have to take the logic back to other situation concerned and also make a case that my case can't be differentiated vis-a-vis what it is here. Circulars are always illustrative of the problem which they are trying to resolve. If there is a similar problem, if there is a similar pain to some other person, a medicine or a relief ought to be given. It can't be denied because it was merely stated. Otherwise, the differentiation between the two people who are otherwise equal may not be an intelligent differentiation. One will have to see how judiciary develops and certain precedents in terms of the interpretation of the circular. To me, there may be some precedents with further research one should be able to get, especially in the GST law concern. Proceeding further, write-off of bad debt, fully or partially, there is no settlement concern, there is nothing between two people, and the question will come up is, and this was always there, that look, you gave up certain things to loan, what about bad debts? What about interest on outstanding receivable? Now, there is a standard practice where I would levy interest to my customers. If I believe that my business interest or commercial expediency is so required, I may waive off those interests. Now, whether those will also come under 194 are certain questions. To me, again, no, the circular and the purport of circular has to be extended to other cases. You can't have a case where 1% is bleeding merely because his name was stated. You administered a certain medicine. There is an equal taxpayer who is sitting beside you. He can't be denied an equal medicine as far as the law or the governance of legislatures are concerned. What about the same banks and financial institution? I waive off, I reduce certain processing fees after charging. There may be interest on credit card or interest on certain balances, which I waive off because I believe that I will get more businesses from the other party. Even in that case, this circular does not protect on a standalone basis. Those questions will have to be answered on the merits of 194R. An absolute myopic way to say that only financial institutions are covered, rest are not covered. What about a loan which is given to a parent and a subsidiary? How many times we have seen that a parent gives loan to a foreign subsidiary? The business was purchased. Unfortunately, business did not do well and loan has to be written off or waived off. In this context, what should I do? Perhaps in those cases, I would say that the other party is non-resident. Thank God I have a treaty concern. But if same case is replicated in an Indian story from an Indian payer recipient standpoint, I will have to answer it more better. Somewhere, somehow, if the litigation goes on, somebody will say, please convert this into equity, pay additional stamp duty and get out of 194R, write off, do whatever you want, so on and so forth. What about a waiver or a settlement of intercorporate deposit between group companies? What about NBFCs which are not listed as financial institutions? Are certain questions which will come up. Look at the way in which cases of IBC will have to be dealt with. In fact, my IBC scheme will require certain paragraphs to deal with 194R, the resolution plan, as we popularly say. In case of IBC proceedings where there are haircuts which are taking place, at one side of the spectrum, you may have certain financial creditors. Highly possible that they will be forming part of this list which is prescribed. But there are certain operational creditors also which are there. Now, even they are giving up that certain right concern. Whether you will ask them to deduct tax under 194R and create that same pain and agony, in my view, some things could have been better dealt with. This was dealing with first question. Any questions here? If it is Sachin and the team, you may start unmuting them and then we move towards the question number 2. We wait for 1 minute, otherwise we proceed to question number 2.
Bhaumik, so far there is no question. Maybe if anyone has any question, they can either ask us to unmute them or put it in a chat box so that we can ask.
Very well. Maybe if there is anything, we will take as part of the second question, because
Sure.
let's move further. But if there is anything, they can follow the instructions as Sachin mentioned. Moving further, TDS on reimbursement. This is an FAQ 2. What are the first principles dealing with reimbursement, and what is the law telling us? There are various wordings with various provisions uses. 194J, 194C says any sum, so on and so forth. The question, which is very plain and simple, is that A gives certain money to B. Why? Because B paid that particular amount on behalf of A. The question is whether the TDS has to be deducted vis-a-vis these two people. Judicial precedent, Bombay High Court, the first decision, Zypher Biomedical, it's a wonderfully worded decision. There, the conditions have been very straight that ultimately TDS forms part of a recovery mechanism, which itself forms part of Section 4, subsection 2. Section 190, which opens up the entire TDS provision, itself mentioned that there has to be certain income which is chargeable to tax. If it is a case of reimbursement where A is paying money to B, it does not have any profit element within it. There are a host of precedents which have unanimously now said that no TDS is required to be deducted. One felt this thing is now settled, and therefore, to this extent, there was a certainty in terms of legislature. 194R on its own, on its merits, on the wordings reads, where any benefit or perquisite is provided to the recipient who is in the course of business or profession. It is not clear. In fact, one cannot fathom also how a transaction of reimbursement can give rise to a benefit or income in the hands of recipient or a perquisite. But nonetheless, we did have some example which created more furor. Example in the erstwhile circular 1 merely stated that, look, it's very simple proposition from here. Let's not complicate the things. In whose name the invoice is generated. If it is in your name, being the deductor, don't deduct. If it is in the recipient name, deduct. One fell short of understanding that it's not about deduction. Had it been 0.1%, perhaps the furor or the grievance would have been far lesser, but it's about 10%. Now, 10% effectively damages the cash flow of the recipient who is making the payment on behalf of third person. Representations was made, and somehow in various conferences, one of which even I was party to it, there was a concept of pure agent which was coming up, that there is something in GST which is the pure agent concept. Before we move, let us see, can we read this FAQ in slightly different fashion? Because the question will be, you've got question number, whatever, FAQ circular 1, you've got circular 2, both of them are equally existing in law. It is not as if this circular repudiates the earlier circular, both are in existence. And therefore, fundamentally, certain questions has to be asked. It's not as if one should be joyous that there is a pure agent concept. Now my problems are over. No, we will deal with it subsequently. Therefore, one will need to see if I can find answers within this circular itself. If I can find answer, my problem is resolved. First paragraph which you are seeing on the screen is bodily taken from the first circular itself. Let us first deal with the question, then we come back, and then we will deal with circular 2. If under the terms of the agreement, expense incurred by the service provider is the cost of service recipient, and look at this, if the expenditure incurred by the service provider is the cost of service recipient, and such cost is reimbursed by the service recipient to service provider, how it is benefit or perquisite if bill is not in the name of service recipient? This is the question. Fair. Now they are explaining what we said. In fact, I have removed the second paragraph, but it says emphatically that we were true, we were correct in this interpretation. Let us look at this slightly different. It has been clarified that any expenditure which is liability of a person carrying on business or profession, if met by the other person, is in effect benefit or perquisite provided by the second person to the first person in the course of business or profession. Let's take two examples. For this particular paragraph to work, one has to agree on the words which are stated in red. It has been clarified that any expenditure which is liability of the person carrying on business or profession, if met by the other person, is in effect benefit or perquisite. Now, if it is not a liability of the service provider, but it is met, therefore it is not of the service provider, it was always of the service recipient, then to begin with, one would question that this circular to begin with does not apply to me. Let's take an example. Popular example, it's ongoing across the board. There are certain charges like custom house clearing agent or say electricity of a rental premises, so on and so forth. Okay. Now here the question is that am I required to deduct tax because electricity bill will never be in the name of lessee. It can't be. It is the owner in whose name the electricity bill would be. So therefore, am I now required to deduct TDS? Let us read the circular the way in which I am now trying to read. It has been clarified that any expenditure which is liability of a person carrying on business or profession, if met by the other person, is in effect benefit or perquisite provided by the second person to first person. Now, if under the rental agreement, I have made it very clear that all the expenditure in the nature of electricity, etc., would always belong to the lessee. In that case, how can you read it in this way to bring it within 194R? In that case, it is not the liability of the landlord for him to even to begin with fall within the purview of first paragraph. That is the first point. Let us take an example where Sachin, I engaged Sachin to fight a particular case or to argue a particular case in Pune tribunal. Arrangement with Sachin was something like this, that I will pay you 20 lakhs of rupees and it's an all-in cost. Don't tell me how many adjournment it happened. Don't tell me that you had to travel by a flight because you were at some other place. It's an all-in cost. Now, in spite of that, Sachin travels, say, from Mumbai to Pune in a flight and gives me certain flight tickets. I pay to Sachin. In that case, clearly that is a benefit because my agreement was an all-in agreement with Sachin. But because I'm paying something over and above an all-in agreement, you should fall within the provisions of subsection 1, first paragraph, leaving apart whether cash is covered by 194R. Now, if you read it in this way, a lot of difficulty will get resolved because you will need a counter defense, you will need a second defense. Pure agent concept is not as straight for the purpose of TDS as one would like. I'll take it subsequently. Now they are saying, now if the service provider incurs some expenditure in the course of rendering the service to service recipient and the bill is in the name of service provider, then in substance, irrespective of the agreement, this expense is liability of the service provider, not of service recipient. One cannot fathom if, say, for the same litigation, Sachin has to hire a senior counsel, say Mr. Salve. It is always agreed that his fees would be mine, but for certain vendor registration purposes, I reimburse it to Sachin concern. It can't be a liability of Sachin merely because Mr. Salve raises the invoice in the name of Sachin. It can't be that way. So therefore, one will go within the circular and say that this circular does not apply. Why? Because they are saying that now there are certain concepts under GST law, which is a pure agent concept. And if you satisfy those conditions, the input credit is not given to the service provider, but it is given to the service recipient. Let's pause here. From the discussion from here for next 20 minutes concerned, who is the service provider and who is the service recipient? In context of section 194R, service recipient is the deductor. In context of section 194R, service provider is the recipient in whose name I am deducting TDS and in whose 26A this TDS is likely to be reflected. That differentiation is very important to understand the subsequent slide concern and the concept of pure agent, how that concept is there under GST law, how that concept has to be borrowed under the provisions of 194R, how both of them will play with each other, and how the saga will go on. Pure agent has been defined to mean somebody like this, who enters into a contractual agreement with the recipient of supply to act as his pure agent to incur expenditure or cost in the course of supply of goods or services to both. He neither intends to hold nor holds any title to the goods or services or both, so procure or provided as pure agent of the services. Does not use for his own interest such goods or services so procured, and receives only the actual amount incurred to procure such goods or services in addition. This is how they work. Most importantly, apart from the definition, they say, and this is also under the GST law, so it's not anything which is new. They say that following are the additional conditions which pure agents must comply with. The supplier acts as a pure agent of the recipient of supply when he makes the payment to the third party on authorization by such recipients. We will deal with each of the conditions separately in different slides. So this is just to warm up and for each one of us to familiarize. We will deal with this in detail as we move forward. The payment made by the pure agent on behalf of recipient of supply has been separately indicated in the invoice issued by the pure agent to the recipient of service, and the supplies procured by the pure agent from third party as a pure agent of the recipient of supply are in addition to the services he supplies on his own account. Now, if all these things are satisfied, then they say that therefore, then whatever reimbursement you pay, this will not attract 194R. In principle, whenever there is any exception or beneficial provision, it has to be welcomed with full hands. Here, it is possible that because this is an issue even under GST law, the pure agent conditions may be satisfied, and very many transactions which erstwhile were perceived to fall within 194R or may give rise to litigations will now fall out. So therefore, this clarification to begin with is extremely beneficial. Now, as this clarification comes up, the question for us would be, and that's where I said that from here, we will again get exposure to a GST law. So if somebody believed that the domain has to be expanded, then again, the law is doing enough for us to expand the domain. We need not read the law in vacuum. We can read the law in terms of the actual implementation itself. First condition. Now, this is just the initial comments here, that this is the first time where the concept of pure agent has been brought within the provisions of TDS. Erstwhile law, as expounded by Bombay High Court and various other precedents, was very, very simple. It was not subject to satisfaction of so very condition. Now, therefore, the levy of GST and credit of ITC to begin with had never no bearing of under income tax. GST is levied even on expenditure which are depreciable, that means on capital account. Input credit is defined on certain things which otherwise are legitimate business expenditure. But however, for certain reasons, for first time we see that there is some linkages which is drawn within the two legislatures. Now, the question will always be that if I am claiming a benefit of reimbursement, technically speaking, the question would be, is this position accepted under GST law? Now, under GST law also, it is not a straight concept. There are decisions which are in favor, there are decisions against. So if on a bona fide belief, I have taken a view that this person is a pure agent concern, in that case, if that decision is discarded, if that position is discarded, it is possible that my position in context of 194R will come under question, because there can be a case where a penalty may not be imposed if there are bona fides, but there is nothing known as bona fides when it comes to 201 proceedings. If you don't deduct, it is automatic and mechanical in nature. The difficulty will also be that post this circular, whenever we make an argument of reimbursement, the question would be that department may perhaps try to import this concept of pure agent and tell me how you are doing 194J. It is possible that when two people are dealing for the purpose of TDS provision, very little considerations have been given to pure agent concept. Traditionally, or before this circular, what was the practice? Issue a separate invoice, give me a rupee by rupee count, give me the backup concern. If this is there, I am satisfied, no TDS would be deducted. One will have to see how these principles will evolve. It is a bit of a threat that this principle may subsequently apply even to the other provisions. If it happens, then surely there is a need to reconcile and align two laws so that the position in GST is exactly mimicked for non-deduction under 194R. Let's deal with the conditions, because all the conditions are mandatory. All the conditions are mandatory. And therefore, one will, if any of the conditions is not satisfied, law says that the benefit of circular 2 cannot be granted. I am not clear how certain conditions, which we will deal with subsequently, if those are procedural in nature, if that is not satisfied, how that can give rise to a benefit or perquisite. Because the words like benefits or perquisites are factual aspect. It is not something which is dependent upon certain conditions or procedural compliances. Nonetheless, let's deal with the concept. Now, before we proceed, let me just bring upon a limitation here, that the entire subsequent slide, where now we are proceeding towards the exposition given under GST law, is only to help us that when I'm taking a position in 194R, I'm ring fencing certain possible lapses which may take place. This is not for the purpose of interpreting how in GST law the pure agent should be there. The decisions are evolving. After 1 year, the positions may be something else. But this is as on the date, just to understand how this law is read under GST law. Now, under the law, pure agent should be an agent. An agent is defined where a person acts on behalf of somebody else. Now, if he does not act on behalf of somebody else, he is not a pure agent concern. For a person, and these are all precedents, these are all law laid down by various AR decisions in context of GST law. For a person to act as a pure agent, he must be the supplier of goods or services above, and then he must procure certain goods or services for supply for which he is incurring expenditure. So it should not be a case where he is only an intermediary as per the GST law. Income tax, but for this circular was always clear. Give me the backup and that's the end of the story. Here in the pure agent concept, they say there are two components here. One is the main service and second is the ancillary amounts. It is this ancillary amounts for which you are granted the protection of pure agent. If I borrow the same concept here and there is a person who only reimburses, who is an agency only to reimburse this particular cost, then in that case, the benefit of pure agent cannot be extended. Ancillary charges for which the pure agent status is claimed should be provided by the third party to the service recipient, means the deductor in context of 194R, and not incurred by the pure agent for the purpose of rendering his business. That's where the question will come up. I am a chartered accountant. My agreement says that all the out-of-pocket expenditure would be borne by the client. Now, therefore, my journey starts. I get, say, 2 lakhs of rupees as a professional fee. I visit at a particular place in a particular cab. I stay in a particular hotel. In that case, agreement, it is always stated that I will bear this particular cost. But that may not elevate the other person to a pure agent, because there are precedents which have stated that if it is very clear that these services are required by you to perform your own work, then in that case, you can't elevate this particular ancillary charges to the pure agent concept. So therefore, if the client is okay not to question my status of OPE, and if certain expenditure are incurred in course of business, so therefore, let's take a particular case of an engineering design. Now, engineering design says that I will render this design to you plus out-of-pocket expenses. By conduct, whatever is the printing charges, etc., or the high-end stationery charges or the high-end ink charges, he puts it as an OP and bills it to the client. Now, that may not in isolation may give rise to pure agent concept. So one should not principally, just because reimbursement has been stated, elevate them. One will need to be very, very careful, because this is a way higher sticky wicket than what it was there pre 194R circular coming up and touching upon this aspect. And that is where I said that one will have to go to the first para which we read and try to find out the solution in circular 1 itself, should the pure agent status fail. Merely payment of actual cost, that means there is no markup concern, does not perfect a pure agency kind of. Just hold on, this panel is coming in between. Just hold on. Yeah, does not elevate a person to this particular concept. Now, pure agent does not take input credit on GST by the third party. It is the service provider, that means the deductor, which should ideally claim. The question will surely be thrown up that, look, if you are claiming exemption, tell me and prove that you are claimed input tax credit. Now, if one goes beyond and in detail in pure agent, then the level of onus is far, far higher in context of 194R than what it would happen had it not been there, because this is a concept which is very, very complicated and composite in nature. The first condition, and I made a reference that there are certain conditions, these conditions on the screen. Is the screen visible? Yeah. One has to satisfy these certain conditions. In the next slide, we will take each of the condition concerned. The condition reads something like this. The first condition, which we call it to be an authorization condition. Supplier acts as a pure agent of recipient of supply when he makes the payment to the third party on authorization by such recipient. So therefore, there has to be a pre-authorization which has to be there, and that authorization should be before the payment is made. By whom? Not by you to the service provider, but by service provider to the third party. And courts, ARs have come up very, very heavily on this condition concern in context of GST law. This has been read as a mandatory condition. If authorization is not there, then you are not a pure agent. Forget there is no markup, forget there is no benefit which is coming. And therefore, to me, even if I fail on pure agent, I will go back to section 194R and challenge the wordings on 194R to prevent adversarial circumstances. Exemption as pure agent, and these are all precedents, these are all smaller ratios which I am reading. Just to just hold on. Yeah, exemption as pure agent is not available. Exemption as pure agent is not available while making payment of electricity and water charges collected from tenants, as neither instruction nor authorization was obtained from tenant to act as pure agent and make third party payment. Very, very significant. So what does this mean? That while there is a benefit which is there, it is then better because the case laws are divided. At one end, you have got a same Maharashtra which is saying that no, this is not pure agent, you should have levied GST on this particular component. I do have subsequent decision in case of Narmada. It will come up at some time, some slide. But then in Narmada case, the court AR was clear that electricity charges and water charges should not be subject to GST because he is a pure agent. But their authorization, one was able to prove. What is the key takeaway for us? If I am taking benefit, one will have to check the agreement. If there is no agreement, at least have an email correspondence, at least authorize them upfront that you are authorized for the purpose of being a pure agent, so on and so forth, that pay it on my behalf and I will reimburse you. Otherwise, you will not perfect this condition. Pure agent benefit cannot be availed when electricity procured from electricity supply authorities for resident is also used for providing maintenance services, and the agreements entered into residents do not provide any clause or reference to acting as pure agent. Electricity charges recovered from residents on actual basis are subject to GST. Now, this decision can be well explorated to a larger business house, larger commercial property, where certain charges are added to you and one will need to take it on merits. Benefit of pure agents cannot be availed in absence of contractual arrangement. In this case, stipend was paid by a training institution. So what was the case? I was doing a training institution. There are various students which comes to me, say Word, Excel, whatever. Then I promised them that I will give you 2 months of practical training. Industry partners used to take these services, and the arrangement was I will only recover cost from you. So I used to pay the student and they used to pay me, so that the vendor in the industry partners are limited. Now here they were very clear that this is not a pure agent because there is no contractual agreement which establishes or elevates you to the pure agent. Now this is all essential because many a times the transactions happen where a person incurs expenditure out of commercial expediencies. We also at times tell other consultants as part of businesses just to incur and claim reimbursement. If authorizations are not there, you can't extend the benefit of 194R concern. This was the term, this was the proposition which I was trying to bring up. Applicant could not establish the supply of the applicant was duly authorized at the time of making the payment of stamp duty for bank guarantee given to the applicant. In this case, applicant was importer and payment of stamp duty was made by an intermediary. Statutory charges, statutory dues. One would believe at first principles this is reimbursement pure agent, but merely because authorization was not there, courts are very clear, at least AR ruling, to deny a pure agent status. Second is the invoicing condition. The payment made by pure agent on behalf of recipient of supply has been separately indicated in the invoice issued by the pure agent. Now what it means is that the invoice should have 2 parts principally, or there may be a separate invoice. But if it is not clearly stated that this is for reimbursement, then in that case you can't avail the benefit. So if it is stated lump sum amount, okay, that fees for professional service or fees for so on and so forth, or say registration charges, and I'm making the payment. It is better that here we align these invoices which comes up to ensure that the benefit of pure agent is specifically stated or indicated in the invoices itself. There is a controversy in GST law to which I believe our law is better in 194R. There is one rudimentary decision which says that if there is a separate invoice, then that AR decision stated that should not be entitled to pure agent, because this condition envisages a composite invoice only, not a separate invoice. Fortunately, that will not be a controversy for 194R, because question itself deals with a separate invoice concept. The question itself says that there is a bill, a separate invoice which has been raised as far as I am concerned. But nonetheless, to me, it is not correct to deny pure agent merely because separate invoice was stated. Importantly, additional supply condition. Services procured by a pure agent from third party as pure agent of services are in addition to the services he supplies on his account. Therefore, invoice and agreement should specifically state, in addition to the ones that he is acting as pure agent, there has to be a service component for which he is doing his services, and the other part should be the pure agent. Now, here courts have analyzed whether the other ancillary services can be elevated to the pure agent or not. They are saying that if service provider was liable to pay, no matter what service recipient does, then you can't elevate this to a case of a pure agent, right? So these are certain principles which are emanating. Certain illustrations where a person is denied a pure agent status. Applicant is engaged in manpower supply. So what it does is they charges to, one is the service charge for he is giving recruitment agency, and second is reimbursement of the charges, secondment arrangement. Many a times there are requests from clients that why don't you take somebody on your payroll and I will pay you X amount. Now there the question was whether GST should be levied on this second part. It was specifically stated that look, I will act as pure agent in the agreement. But court was clear that in order to render this particular services, this expenditure was required. A concept of pure agent was not granted. Applicant provides housekeeping services, so those cleaning stuff or certain supervisory services, watchman services, etc. was provided. Hospital agreed to pay X rupees as fee and reimbursement as actuals to those people in terms of salaries and wages. Pure agent concept was denied because they said that to render these services you need to follow this. Applicant, he was a hotelier, provides arrangement like flower direct decoration, DJ, dance floor. In addition to food, he also takes nominal charge. Here he gave back-to-back invoices that these are my third-party costs. They denied on the ground that you are providing a banquet service and all these are integral to those services. Line production, this is more prevalent in terms of Bollywood or say a cinematographic industry or here a line producer incurs numerous expenditure. A line producer is the person who in principally controls your budget. Producer makes payment to line producer and then line producer makes payment to various parties. He agreed on X percentage of cost at his fees and cost was agreed to be reimbursed as actual. Court or AR denied the benefit of pure agency because they said this is integral to you rendering services of line production. You don't fit within the pure agent concept. Fortunately, there are some decisions, some illustrations. This illustration, which is in the bracket, is part of the GST rules itself. This is coming as an example in the GST rules itself. Am I audible, Mehul? Is the speed okay? All right. Corporate Services Firm A is engaged to handle legal work pertaining to the incorporation of company B. Other than its service, A also recovers from B registration fee and approval fee for name in ROC. These fees are charged by the ROC for the registration and approval of name are compulsorily levied. A is merely acting as a pure agent in payment of those fees. Therefore, A is recovery and is a disbursement and not part of value for GST supplies. Perhaps some examples like typically even we pay appeal fees, certain fees which is dealing with registrations, etc., etc. Something which will be better in terms of elevating because the example is forming part of statute. It can't be questioned. It can't be denied. Just that agreement should specifically authorize, and the concept of other conditions of invoicing, etc., should be taken care of. These are illustrations of pure agent. Applicants provides coaching, learning, and training services and collects amount as examination fee from the students and remit the same to respective college or universities concerned. Without any profit element, activity of examination fee was held to be a pure agent. Applicant is providing clinical trial management service. Agreements provide that applicant gets clinical trial conducted through principal investigators or institute, and applicant transfer the payment to investigator. There also it is a concept of pure agent. I am hiring a broker, I am hiring a lawyer, I want to buy a real estate property. I pay him the stamp duty and registration cost. It was absolutely agreed that this is not a cost which will come to me. It is always borne by the purchaser and not by the lawyer or the agency. Now here, as I said, that facts have a critical role to play. If the facts are clear and the adage of actual cost is clear, then benefit can also be given. Lessor is in receipt of electricity charges from lessor if there is a separate submitter and lessor collects the charges at actual. Your authorization was, they were able to prove the authorization, benefit of your agent was given to. SSE, a commission agent acting on behalf of principal, paid over amounts under the primary scheme or retail scheme to various retailers selling products on its principal and later got amount thereof. Said amount was not to be included. Now here, there are many cases, one will have to see how it follows, because there are cases where manufacturer runs a particular scheme, distributor buys those particular incentives and raises a back-to-back invoice as reimbursement on the manufacturer. Say, for example, I am an FMCG company. I tell to the distributors, please buy particular products, say, say a cooker or certain other small white goods item. In that case, he gives it to the subsequent retailers in the chain and raises invoice on me. In this case, this benefit is given, something which should be looked very, very closely, because if this is the proposition concerned, there can be a benefit in terms of 194R. Because the questions in terms of this entire value chain in a retail supply chain have not been addressed. So is it a case where this kind of precedence will give me certain value add or benefit is something which one will have to explore as the time passes. Many examples which are given in the CBIC website, that means the government owned website. Port fee, port charges, custom duty, transportation charges incurred by custom broker. Expenditures incurred by CNF agent and reimbursed by principals, freight, godown charges, etc. This is significant in practice because a lot of questions was raised as to how do we deal with this. Earlier, no TDS was deducted. Perhaps a protection is also given under the pure agent concept. Equally important is the next question. So I'm done with the pure agent. We open up for some Q&A. If a reimbursement is traditionally covered by other section, I believe it will not be covered by 194R. Is the understanding correct? We wait for this particular question, which deals with what has been raised in the dialog box. We move further. All right. We got a next question. Very interesting. Very interesting. There is at one side circular 715, which says that reimbursement portion cannot be excluded. So the proposition goes like this: that I am a chartered accountant. I have raised an invoice of say 1 lakh and 10,000 out of pocket has been charged. Forget the pure agent concept. Say for whatever purposes, traveling, food, whatever purposes. Circular says 715 that you have to deduct on the gross amount without excluding reimbursement. Noted. So this circular was also brought, and the question was whether 194G or 194R applies, or 194C would apply to them. Okay. Now here, the question is something like this: that which section will have primacy? Most of the cases, 10% is the TDS rate, so one would wonder why. But in 194C's, technical services at this moment are still at 2%. So there is some kind of delta which is there. So look at it, what the law clarifies, and the clarification is one way. If out-of-pocket expenses are already part of consideration in the bill, on which tax is deducted under the relevant provisions of the Act, other than Section 194R, in accordance with Circular 715, it is clarified that there will not be any further liability under 194R. Great. Absolutely great, but one does not know what is the key takeaway, because that would have been the conclusion even otherwise. If I've deducted at 10%, 194R also require me to deduct at 10%. There can't be anything more which could have been done. So therefore, this clarification could have been avoided. But still, because they have given clarification, one will have to see how do we read this thing. Circular merely state that if tax is deducted on gross amount, no tax is required to 194R. It does not give primacy of 194J over 194R. So if there is a case which is there saddled at 2% and 194R, it is not as if 194R or 194C gets overridden. Circular is of very limited and narrow bandwidth. One will have to see which is the closer section and on a bona fide belief apply a particular provision. Enough judicial precedents are also there to say that if a tax was deducted under a particular provision on a bona fide basis, perhaps the law achieved its own purpose and 201 proceedings should not be elevated. Now, what if, and that's where the circular is now silent, that I don't want to go under 194J, right? Because the circular, the way in which it is mentioned, says that if 194J is deducted, you don't need 194R. But what if I want to now say I want to take benefit of 194R? There is a pure agent concept which is there, and there is a reimbursement, and assume this is the example only which is before us, because this example is part of statute. This example can't be denied by the tax authorities as well. Now here, would it be right if I say that invoke 194R and then make a statement that exclude this reimbursement, don't deduct TDS? So it does not lay which section will have priority. Can I use 194R to my benefit vis-a-vis 194J? Perhaps to me that thing should be there. Otherwise, the concept of pure agent may get redundant in many cases. But nonetheless, it does open up a Pandora's box. It's not as if one section has priority over another. If you did certain things, and what is that certain thing? Deducted tax, even on reimbursement, you can go on 194R. Can somebody now make a statement that, look, you are of the bona fide belief that other person is a pure agent, you did not deduct under 194R, take him back to 715 and put him under 194J. Such things may be possible as well. TDS as a law is becoming murky. One would have believed that if appropriate TDS is deducted, the purpose is achieved and one should move further. But the delta of rates can create some kind of issue in proceedings under 201 as well. Dealers conference. 3 issues was raised. First issue is, and what was this example? Example was, questions was asked that if I have got dealers conference or customers conference, whether 194R will apply. The law said that no, 194R will not apply if it is for certain purposes, like you want to inform about the product, you want to ensure reconcile your receivable. Nonetheless, certain business purposes was there. As I stated, whenever any benefit is given, there are certain caveats also which are added. One of the caveats was that if it is limited to a class of people, then this benefit cannot be there. So questions was raised by industry majors that, look, I have got 5,000 dealers, tell me one hotel where I can accommodate everybody. And they realized that that was not the intent. And hence, they said that this is not necessary that you all call dealers. Perhaps a selective kind of a conference should suffice the purposes. That means the benefit can be granted. What if dealers arise one day before or one day after? Because erstwhile circular made certain encroachment to the way in which a person does business. That I don't care if you come a day earlier, if you go a day later, there is a benefit. You ought to have moved back. You should have ought to have compulsorily moved back. Otherwise, there is a benefit. Perhaps you are enjoying the facility of hotel. Perhaps you are enjoying the leisure facility concern. If such is the case, I will not give you benefit, or TDS should have been deducted. Now there is an exclusion which is given. What if the dealers arrive one day earlier? They say that expenditure on participants of dealer for conference days are on account of overstays to the days of the conference and beyond the dates of such conference would be considered as benefit of use. Now there is an exception. that a day immediately prior to the actual start of the conference and a day immediately after the end would not be considered. So just one day before and one day after has been excluded. For certain reasons, if I have to come 2 days earlier because I have alternate flight sequence or the flight sequence is not matching, technically speaking, benefit should not be given. Perhaps that's where the law, if it goes and controls a business practice, there will be problems. They should have stated in a statement's way that if somebody is coming earlier and after, because it can be demonstrated that there was a logistic convenience attached to it, there was no problem. Perhaps that could have been a better way, but nonetheless, we would like to put certain barriers in terms of the start point and the end point, and this is the point for us. Most important is look at the alternative which is given, and that's where the things start. The third issue was how to identify benefits of individual dealers in a group activity. The question was that earlier circular said if there are any leisure activities which are given, then in that case, it is a benefit and TDS ought to have been deducted. Question was raised in terms of example is, let's take a Bollywood night, which I have. A star singer has been called to my event and he performs. Now it is not mandatory for all the dealers to attend it. Some attend, some don't attend. How will I deduct 194R? There are some common gaming activities, some certain leisure activities which I am doing. How will you deduct 194R? Clarification says something like this, that there may be practical difficulties in identifying such benefits or perquisite to the actual recipient due to the fact that it is a group activity and reasonable allocation is not possible. Non-compliance of 194R in such a case would not only result in disallowance under 40A or 40A1A, but may also result in treating benefit stroke perquisite provider as an assessee in default under 201 of the Act with all other consequences. These are the apprehensions which industry have raised to us. Let me give you some alternatives. In order to remove these practical difficulties, it is clarified that perquisite or benefit, if provided, is provided in a group activity in a manner that it is difficult to match such benefit or perquisite to each participant using a reasonable allocation key. The benefit or perquisite provider may at his option not claim the expenditure representing such benefit or perquisite as deductible expenditure for computing his total income. They are saying that don't claim it as a deduction. If you have 10AA unit, if you are exempt unit, you may add back this exemption, you may add back this genuine expenditure, and still you can claim a higher 10AA exemption, but you add it back. That's what the law says. If he decides to opt so, he will not be required to deduct tax under 194R on such benefit or perquisite, and therefore he will not be treated as an assessee in default under 201 of the Act. Thus, in such case, he must add back the expenditure representing the benefit of perquisite to calculate his total income if such expenditure is debited to the account. This is what the law says. In substance, what they are saying is, fine, don't deduct TDS, but don't claim an expenditure also. Add it back to your total income, I am fine. Now, here, preference of 194 of TDS under 194R is given versus disallowance under that profit and gains of business or profession. Now, if I don't deduct TDS, 40A1A only disallows 30% of expenditure. There may be 201 proceedings separate, but there can at the most at a deduction level be a 30% disallowance. Vis-a-vis that the circular says taken 100% deduction. So it's not as if that better disallow. In any case, somebody may make a statement that, look, there were conferences, we were ignorant, there were certain views, 194R applied, did not apply. Fine, let's take a disallowance under 40A1A. That is only 30%. Here it's a 100% disallowance. So that is a numerical arithmetic comparison, which is important. Now, this is an option given to the particular assessee. The questions would also be that in what circumstances you can do if it is difficult to match such benefit or perquisite to each participant using a reasonable allocation key. I believe that I cannot do it. Now, first question would be that it is whose wisdom? It is whose wisdom to decide that I cannot do it. Now, would it be an assessee's wisdom or The bigger difficulty is that no, you will have to demonstrate that why you could not do it. Some can, and because see, the law as it stands, you can go 10 years behind in terms of the reassessment proceedings. The law as it stands today. So it's not as if 40A 1A can come only for certain period, because there may be numerous conferences, numerous events, and I took a particular position. Am I now required to create a backup that look, reasonable allocation was not possible? Who will determine this reasonable allocation? Can officers say, thank you very much, I still would like to invoke 240A 1A, but also ignite a 201 proceeding? Because the problem is, in the present machinery, the way in which it is, a corporate tax assessment wing is a different wing, a 201 is a TDS wing. Both of them have limited convergences. So it is possible that this wing will accept a 100% disallowance, saying, okay, I'm okay. In any case, whenever you are disallowing, they will never raise a question in audit because they are thankful to you. But there is a 201 proceeding which may question this thing and say that I am not in agreement. There was a reasonable key possible, but you did not do. It was easy. If there were 100 participants, divide by 100. That's it. If somebody says there are any logs which are maintained, then you know who was entry, who was entry, who was entry out, so on and so forth. If there are any photographs which brings your event to your LinkedIn page, as the companies frequently do in order to elevate the corporate image and support the HR initiatives, they can very well rely upon it that, sir, in your event, look at the photographs, everybody was there. What are you saying? So on and so forth. One will need to see how this actually at ground will pay. Second is at what time I can exercise this option. Typically under law, and that is where there is a case where law is written and there is a case where circular is written. If the circular is written in a very loose manner, there would be certain things which would be open. At what time should I exercise this? Simple answer is at the time of filing the return. But if I believe under a bona fide view that look, this is not covered by 194R, but for certain reason at an assessment level, can I put a without prejudice claim to say that now admit 37.1, admit a complete disallowance, get 194R out of me? Can I make a statement in 201 proceeding that I am giving you in writing that in that year, whatever you are doing, please invoke, please add back, because in any case I have losses in that year. Please add it back and give me this option. Perhaps a 201 proceedings, a TDS officer will say that whatever you have done, did it at that time, but law does not limit you. Can I do it in terms of a reassessment proceeding where under reassessment a reason is issued and I say, fine, thank you very much, take this as a 100%. I am now telling you that treat this as a 100% disallowance and let's proceed further. One does not know. Now, is the option restricted to dealers conference only, or it is a larger implication? Now, to me, it is a larger, because circular 8, this circular or this question in circular 2 modifies, and this is the only para, only FAQ or only question where it is stated that to this extent the question is modified. None of other 7 questions we will find this kind of language. So those other 6 questions add to the earlier question. This only modifies question 8. Now, question 8 dealt with business and dealers conference. To me, whatever exemptions which are given for a dealers conference should also be equally applicable for a business conference as well. The law says that the benefit of perquisite is provided to it if it is difficult. So the benefit of perquisite is provided in a group activity. Now, therefore, what is this group activity concern? What is this group activity concern is something which one will have to see. Difficulty in what sense? Difficulty in terms of my efforts or difficulty in terms of my facts? Group activity in what sense? Therefore, if I am making a statement that I have got a conference where per person room charges, I am aware, 7,500, CTC does their own events, right? There are certain things where you are aware per person what is the debit to CTC per participants, right? Whether this can be called to be a direct one, or I make a statement that there is a difficulty. In order to ascertain this, I need to go to my event manager. With my event manager, I agreed on a lump sum basis. I wrote emails to them. They don't want to give me these room charges because they will come to know that what is the margin which this event manager has therefore considered it. And if such is the case, there is a difficulty. There is a difficulty, and therefore let me proceed on the basis that entire thing happens a group activity. Why we are speaking all this stuff? there is a very, very peculiar case of pharmaceutical companies. Now, pharmaceutical companies disallow entire. So if, say, for example, they have a doctor's conference at London, entire amount has to be disallowed as this is violative of MCI guidelines, apex court ruling, and also a 37(1) explanations which has been added in this budget. So irrespective of the options given in this circular, they were going to add it back. To them, the question would be, can we now promote this practice which people thought has to stop from a TDS standpoint, or am I entitled to the benefit of 194R? In order to get this 100%, that means if you add it back, under what circumstances, under which section, if this expenditure for a pharma company was in any case required to be added back under 37(1), can somebody say that now I don't grant you this option? Answer is no. The law or the circular or the benefit is very, very straight to say that you just need to add it back. If you add it back, don't look at 194R. In what circumstances it is a group activity in a manner that it is difficult to match such benefit or perquisite. So therefore, if I enter into a contract with an intermediary event management company to say that this is the conference, please give me a one lump sum package. They gave me a package, I deducted vis-a-vis that event manager, whatever is the TDS, and proceeded further, added it back. Am I then required to do a 194R? This may appear that are we now trying to hair split the law? Are we trying to defeat the objectives which are there? But these are all practical questions which will come up. Nobody would like to promote a practice which is something which is not perceived to be correct in the nation's interest. But the question will still come up that if the circulars are drafted in a manner which leaves open a lot of gaps, it is possible that some things may be done in a manner where you are falling within the exceptions which is generously given by the circular concern. Group activity, one does not know what is a group activity. Now, whether distribution of brand reminders or insurance of staff, etc., can be termed to be a group activity. I make a statement that I have got 1,000 dealers and I would like to take insurance of their entire staff because this is the ecosystem which I want to promote. Then in that case, this can it call to be a group activity? It is possible. It is possible because a lump sum amount of premium has been charged to me. I will disallow it and proceed further without getting saddled under 194R. So this is something which one has to see. Distribution of samples to distributors. Now, typically, how does it happen? That there are certain samples which a manufacturer wants that it reaches to the retailer. He will give X amount of things to the distributor. There are certain incentive schemes which I want that if certain people achieve certain target, please give them television, please give them motor vehicle. These are all high value items. Please give them, say, items which may be of say 1,000, 5,000 rupees, but very, very recurrent manner it is given. Now, what is the law telling us? There is a difficulty. There is a difficulty in matching benefit or perquisite to each participant. We made a statement that is it restrictive only to conference or a general proposition under 194R is now proposed to be carved out. One does not know, but it is possible to say that there is a general proposition which is coming out. One will have to do a significant research before the next conclusion can be proceeded, because these are the activities, especially in the scheme of distribution and supply chain, where there is no conference per se, but there is certain business call which is taken. But I don't know who is the ultimate recipient. Is not even the person with whom I am dealing business. In that case, can I make a statement that I am adding it back? Again, the pharmaceutical companies will have to evaluate this particular proposition, because it is possible that certain expenditure in any case were added back for the ground that I don't want to enter into litigation. But the question persisted on 194R. There are many of them don't know who the other party is. So what are they doing? They are paying tax at 20% under 206AA, saying that I don't know who the other party is. To them, this 20% is cost. If I make a statement here and say that, look, this is a practical difficulty, I can give you the list of 3,000 distributors and 12,000 retailers which I have. Please tell me how that exact amount matches. Here is the list. It is practically very, very difficult unless a reporting is very, very robust. So these are the new nuances which is coming up. Can one do a pick and choose approach? Identical fact pattern. Expenditure was 5 crores. I felt I should incur my own resources and therefore find out what is a direct match. Another conference expenditure 5 lakhs of rupees. I don't want my core team to spend. I just disallow for ground of materiality? Can I do this kind of a pick and choose approach? They say that disallow the expenditure. What do you disallow? Direct cost or even indirect cost? Any event which takes place, the employees of the companies are equally involved. There is a time cost involved here, and there are many other periphery things which makes an event. What do you disallow? What is the quantum of disallowance for you to pass the test of 194R? Now, can I make a statement, and it appears so, that there are some costs where I'm able to match the benefit, and there are certain things where I don't want to. So therefore, can I, in one conference or one event, apportion the direct cost where TDS is deducted and balance take a disallowance? So I don't take disallowance of the entire event, but try to split it in two parts. Now, can I further make a statement that I am not able to match directly because I have got one event management bill, but I am aware that this dealers, the list of the people who are attending is only attending once in a year. I, as a manufacturer, don't provide them any benefit, but it is the distributors who provide that benefit. So I have no privity of contract. Can I make a statement that I will not disallow because I would like to apportion this 20,000 limit to each of the dealers, and for the balance part, I would like to take this so-called amorphous cost and add it back to the income concern. Now, assuming assessee allocates the cost based on reasonable driver and deduct TDS under 194R, can you mandate assessee to offer disallowance as drivers are argued to be incorrect? So my drivers falls. Without doubt, a fact-finding authority like tribunal have upheld this section of AO that all your drivers are incorrect. You tried to allocate it in a very, very skewed fashion. Now, in that case, how will the law take it? Because to me, but for this kind of clarification, if a reasonable call is taken, if the law is taken, tax is deducted, you can't fall back, because this would be a unique proposition that in entire TDS provisions, once the tax is deducted, unlikely that somebody will again come and question that on what basis you have find out this drivers. What is the consequence of TDS default under other provisions after opting for disallowances? Let's take a case where I have hired an event organizer, I have hired a catering service, and I am paying fee to say an artist Sonu Nigam. In that case, I have decided that entire expenditure would be added back because I don't want any of my dealers to complain to me saying that, sir, we will not even attend any of your event because my 26 AS is showing this as an income. TDS has to be deducted at 10%, but my 26 AS, I will have to additionally cop up the difference of 23% as taxes. So I am not going to attend. Please give me the benefits in kind. Company takes a call that nothing doing, I have to edit back. Now, for whatever reason, if somebody fails in deducting tax, can you now invoke again 40A1A on those expenditure? Friends, 194R in many ways, especially when benefit is given in kind, is outside the books. Why it is outside the books? I purchased an iPad to be given to a chartered accountant or to a doctor or to somebody else who is part of my business associates. When I'm buying that particular iPad, say of the value of 1 crore in totality, I will deduct 194Q. That is through my books. But when the benefit is given to somebody else, that is outside the books concern. So the question here is that can you now invoke 40A1A to say that, look, there is one more provisions. So do hang on. It's not as if that once you added it back, you can't again come back to 40A1A. Can you again be put to prism under 201 proceedings is a question for us to debate in times to come, that whether there can be a duplicity of proceeding, that you may still comply with 194R, but because you didn't comply with somebody else, the consequences are as it is. Proceeding further, healthcare professionals we discussed, this is likely to give rise to very, very interesting consequences. There is an ongoing controversy. What is that ongoing controversy? This is typically a ground which people would try to push, that if I have suo moto made a 40A1A disallowance, don't invoke 201 proceeding. Two decisions, and this is all quick research, don't treat it to be exhaustive at all. Two decisions are in favor, one decision is against. Now, what approach legislature has taken is, you don't want to deduct TDS, don't claim it as an expenditure, neutrality is achieved. Can I make a statement now that this approach itself is one of the options which was always available pursuant to these two people. So if somebody has done a disallowance in past, this is clarificatory in nature. So therefore, don't restrict to 194I. The spectrum of this particular option should be given. The horizon of this particular option should be expanded to very many other TDS provision, and therefore this can one say that this option is retrospective. 40A IA 30% is a recent phenomenon. Before that, it was 100% kind of disallowances. So one will have to see how things move here. There are two other questions, nothing great in that, but moving towards the last question here, I've shot up by 5 minutes, 2 more minutes if possible. Maybe 2 minutes possible. All right. The last question is a question which many never even thought can give rise to benefit or perquisite. The question is like this: whether issuance of bonus share or right share is a benefit or perquisite if issued by the company in which public are substantially interested as defined under 280, and whether tax is required to be deducted. There is a clarification. It is clarified that 194R Act is not required to be deducted on issuance of bonus or right share by a company in which public are substantially interested, where bonus shares are issued to all the shareholders of such company or right share are offered to all the shareholders by such company. Frankly speaking, one is not aware to what extent government thinks that the boundaries of 194R can possibly extend. The understanding was that when a benefit is provided by one person to the another person in the course of business or profession, 194R should get triggered. Now here it is a case of rights shares and bonus shares. Now how this is in the course of business or profession, one is not clear. Supreme Court in bonus share made it very clear that there is no benefit, there is no income. It is the same, you remain same in terms of your wealth pre and post. So one is not aware that how one can say this is benefit or perquisite. Clarification, unfortunately, if they had to give, they could have given on a general basis, but is only given on a basis of a widely held company. What about a closely held company? These companies are already fighting 2 or 3 battles. There is a battle of 56 to 7B which is ongoing. Okay, now what is 56 to 7B telling us? That if fair market value was 100, but you issued shares at 200, I will take 100 as difference. What is now law trying to tell us? That other side was 56 to 10. That if you received the shares of a company at a less value, then 56 to 10 used to apply in the hands of recipient, subject to ongoing litigation in National Herald case before Supreme Court. Are we now trying to say that if such closely held company issues shares at 80, whereas fair value 56 to 7B fair value was 100, you will invoke 194R? Doesn't seem to be the intention. This kind of things was never thought of. In fact, we have got provisions of 56, which itself shows that it is under the other sources income. It can't be under that profits and gains. But if you give clarifications on issues which were not required, or even if it was required, but restricted to certain set of companies, other people who are not covered are likely to face certain questions. Issue of shares on preferential basis, buyback at less than fair market value, capital reduction, which is selective or otherwise. All these things may come under certain questions. Just to conclude in last 1 minute, numerous clarifications have been issued. Every clarification which gives certain rigors, which relieves, are always welcome. But frankly speaking, it is highly possible that even after the clarifications, one will be testing 194R on its merits on the plain reading. And that is a journey which one will have to travel together. How will a benefit provider forego claiming deduction on dealer's conference in ITR? Is it a disallowance? If yes, then see, ITR as one amorphous, any other amount which you want to disallow. There is always one amorphous field, any other amount which you offer it to tax. It is that amorphous field. But more importantly is one will have to identify on which expenditure, what positions I have taken, because it is only these things which are getting protected under 194R. ITR has limited information, but as and when the right proceeding comes up, a backup paper would be required also. Can the circular being delegated legislator grant a taxpayer of not being in default without amending 2011? See, this is to remove difficulty. To remove difficulty, what was the difficulty? They said that if you don't deduct tax, there are other provisions which comes up. They are saying I'm stopping those other provisions from being activated by making 194R itself not applicable. The natural consequence is 2011A does not apply because 194R is not applicable. It's not to say that you will not be treated as an assessed in default, it's the other way. Whether staff welfare activities as small as, say, providing tea will be said to be giving benefit to employees, 194R has nothing to do with employees' purchase taxation. That is 17 and the rules thereon. 194R applies only when the recipient in the course of carrying on a business or profession gets certain benefits or purchase. It is a settled position of law that circular exceeding the scope of the sections are not valid. Therefore, one strongly believes that whenever such attempts are made, it will suffer its own fate. But besides circular, there will be a challenge for implementing the section itself. Fair enough, with a small caveat that circular issued under 119, all this precedence was there. Right, this is a slightly different circular where authority of the delegated legislature will have to be challenged, and then one will have to move on as far as this is concerned.